They all talk about NFTs, metaverse, stuff I mostly consider nonsense.
Bitcoin was originally created to be this sort of alternative to reserve currency.
Yeah, it was supposed to be digital gold.
Yeah. The argument that you and I had, discussion that you and I had years ago was about the volatility argument. All right, welcome everybody to another episode of Investing Counterpoint. Today we have a pretty, I think, exciting episode. We're talking a little bit. We're going to talk markets. We're going to talk crypto, though, because Daniel, you were just at a conference in, where was it, Dubai?
Yeah, two conferences back to back.
Yeah, so that's pretty exciting. So we're gonna talk about crypto a little bit because there's been a lot of talk about whether or not crypto belongs in whose portfolio, and there's even talk about putting it into a 401k lineup and things like that. So, let's jump in a little bit with what you heard at the conference. Any interesting takeaways, and then we'll start to talk a little bit about how that affects the markets. And I pulled some data on crypto and things like that. So,
it'd be nice to see it. Maybe a surprise for me. Welcome everybody to the next episode. Remember, this is a show primarily for financial advisors who want to do better for their clients, understand the markets. But not only, right? We are watched by more people now. Apparently, last video got into some YouTube recommendations. So everybody's welcome. Ask questions. We want to create a lively discussion. So ask questions. Don't forget to subscribe to the channel. I keep forgetting to ask for that, but there's a little, subscribe bell. Do that so you don't miss. We do the episodes weekly. Jumping into the crypto stuff. Yeah, I was in Dubai. I was asked to speak at a conference in Dubai called Blockchain Economy, and I also attended another conference back to back. I was blown away by Dubai in some sense. I mean, they created this incredible a place where there's so many people, so many investors, so many people with ideas, technical skill, all in one place. It was pretty astounding. I mean, in the course of like 4 days, I met more interesting people, than I met in years. They're just, it's very easy to talk. It's a very nice atmosphere, and there are a lot of them, so they don't feel exclusive, right? It's not like one or two of them. There's so many of them, so they'll talk to you because they're not on the top of the world. I was at these conferences. Of course, I have a slightly different take on everything. I will say that regarding the portfolio, we can discuss later, but I was a little bit surprised, and the one thing that I didn't like was the lack of focus on Bitcoin. It seems like as if Bitcoin isn't forgotten in the particular crypto conference I went to. They all talk about NFTs, metaverse, stuff I mostly consider nonsense. So they didn't talk about the good stuff much. At least there were not so many booths and not so many presentations. But when you talk to people individually, Bitcoin still looms large. It's still the crypto asset for people who understand what's going on.
So, yeah. Let me ask a question there, though, Daniel. Is it because you think that people are trying to find Bitcoin's a pretty well-established entity in this space, right? It's kind of synonymous with you say cryptocurrency, people think Bitcoin immediately. Yeah. Even if you say blockchain, people think Bitcoin. I think primarily. But do you think it's because people are trying to find other ways to use this blockchain technology and that Bitcoin isn't really the focus for these people because they're trying to find other ways to move their ideas forward using this technology?
Well, I think the answer is even simpler than that. It's all about the money. I mean, Bitcoin is a boring asset now compared to what it was, right? It's been in the range of 20,000 for how long? And people are looking to make money, so I don't think they believe, probably rightly so, that most of the money that was going to be made in Bitcoin is made already. So they're trying to look for other things, not necessarily great things. Like I was not impressed by many of the. It's a paradox, right? I met many smart people, great investors, great programmers, but the actual products that were showcased there, I think it's to me it looked like a sign of a bubble, not in crypto in general, but just overall. There's probably a lot of liquidity where some of these projects, when I look at them, that they got funded, it tells me there's got to be a lot of liquidity, sloshing around.
Well, I mean, you think back to the early internet days, and it's a little different because those were publicly traded companies, and there was a massive amount of hysteria following that. But it took a little while for all of that nonsense to get weeded out. And we talked about this a little while ago. And by the way, if you remember, we came up with this name for this podcast, Investing Counterpoint, probably 3 or 4 years ago now, and it was one of our first discussions was Bitcoin.
Exactly. That was the counterpoint.
This was because because you and I had different opinions on it, and that was the counterpoint. But I mean, I think that's a natural progression of any new technology. This blockchain technology is still pretty new, even though I guess we're 10 years, 12 years in now. But there's still going to be a lot of shakeout. There's still going to be a lot of people are still trying to figure out how to use it successfully, how to use it profitably. And you're going to have nonsense. You're going to have pets, pets.com. You're going to have all kinds of things that are going to shake out of this. But it's a natural progression.
I think ultimately, to be honest, there'll be only a few cryptos that make sense. And talking about Bitcoin, I'm a big believer in Bitcoin. I believe that it is an amazing invention, but not because it's worth $20,000. If it would cost $1,000, I would not be less excited about it today, maybe even more. The thing about Bitcoin is that we can talk about technicalities of the blockchain and what it does. What does it do? What problem does it solve for you as a investor, as a financial advisor? Well, think about the world we're living in today. It's highly unstable. It's highly unstable. And Bitcoin is one of the most stable things, paradoxically, in that world. I'm not talking about the price necessarily, even though that has been fairly stable lately. I'm talking about the underlying algorithm. It is stable and it's predictable, while the world is unpredictable. Again, the financial world especially, but not only, is also non-transparent. It's not very clear to me what's going on, right? What is going to happen and why things happen. Whereas Bitcoin, it's very transparent. It's the ultimate transparency. It's open source code. Everybody can audit it and see, right? So looking, for example, at,
I mean, you say that because you've studied this. Most people cannot go in and audit it and see. So
you have to, when you know that there are tens of thousands of people with expertise that have studied it, there's some degree of comfort. Like, for example,
that I agree with.
Yeah, when I look at the operations of the Federal Reserve, I cannot say that there are tens of thousands of people that looked at their books and everything, and that it's so transparent.
Yes.
Maybe the Fed is not the perfect example, but certainly that goes for the whole financial industry. Looking at the last few weeks, look at what's going on. For example, there was an auction where JGBs, Japanese government bonds, had no buyers. I understand why, right? It has very low yield, but that's something that doesn't make sense. That is not a stable world when you have one of the premier financial economies and production industrial economies of the world cannot sell its debt. That is not something that doesn't look stable to me.
Well, I think you touched on the yield argument, though. Unless you're a local buyer in yen, you have a currency risk, and then you have also a lot of other places. Every other country in the world where you can get higher yield.
But that begs the question, right? It just begs it. Why is a premier industrial economy cannot offer any yield? It's not the fact that they didn't buy it. It's the fact that it just doesn't make sense.
Yeah.
Or if you look at even the US, you have an incredible period of dollar strength, and yet we have a blistering inflation. Those things, there is explanation for everything ultimately, right? I'm not saying it's voodoo and so on, but it just, on its face, it doesn't make sense. Why would, with such a strong dollar, we would see such an inflation print?
So, so that point about Bitcoin, I do agree with. There are if people study it and people really want to, try to understand it. It is a transparent. That's the whole idea of the algorithm, right? Bitcoin was originally created to be this sort of alternative to reserve currency.
Yeah, it was supposed to be digital gold.
Yeah. If you look at this, so this is just performance, and this is not what you really look for when you look for a currency. Right. And this is just all the years of Bitcoin. I just thought it was interesting because a lot of people do buy Bitcoin on a speculative basis. And so I wanted to see kind of what this looks like. And one of the reasons I did print this is because we're in October here, and October is supposed to be the best month for Bitcoin historically. I just thought this was kind of interesting. It's a really, anyways, I just thought it was something interesting. We're only dealing with 7 years of history here, so really only the past 5 years is worth looking at. But when we get to this next slide here, we're looking at adjusted correlations. So this is the performance of down here on this lower corner is the performance of the S&P and the Bitcoin. And this is what you're talking about, the stability here of Bitcoin.
Exactly.
Right? Relative.
When you say only 7 years in relation to Bitcoin, it's incredible to hear that, because Bitcoin's been in existence since 2009, and really in Bitcoin 7 years, that's like a century. You should be talking about a year. Yeah.
But this is why they're kind of focused on the last 5 years, though, because this is kind of when it became a little bit more established. If you go back to the early years, I mean, then you're really kind of all over the place. I mean, so I think that's why this, and this is from something called the Bespoke Investment Group, and I think that's why they're focused on just these last 7 or 5 years, because that's when it's been a little bit more, stable. And this is the period that you're really talking about here, Daniel. I think when you said it's kind of started to calm down, and we're. My argument to you was this is a very short period of time, but it is a much calmer period. Look
at euro over that same period, and you will see that Bitcoin is a currency.
Well, the scale is important, because I mean the euro is still relative to its history. You're 100% right. So what we're seeing is relative to its history, Bitcoin calming down, but euro and GBP and things like that kind of getting more volatile. Although I will say not abnormally. So, but if we look at the, rolling correlations, this is one of the things that we were talking about. This is a 2-year correlation, and this is rising through time. And I can show you the individual correlations. I don't have a whole lot of data here, but the individual correlations here, we showed this chart a couple of weeks ago. But I wanted to do daily correlations, because we're not, we're dealing with things that happen in the same, if I'm looking at the SPY and Bitcoin, I know Bitcoin trades, all the time basically, but I didn't need to do weekly, and we have a shorter period of time that we wanted to discuss. So weekly didn't make sense for correlation. So
you have a 1 year chart. It would be interesting to compare 2 year to 1 year.
You're about to. It's exactly what I'm going. So we're going to do 2 year. This is the 0.41, right?
Yeah.
But this is what I found interesting. So here's the 1 year.
Yep.
0.6. Year to date is 0.6, and then the last 3 months, that period basically 3+ months, is that period where we see the Bitcoin kind of stabilizing. I was surprised at this, actually. It's almost 0.68 to the S&P. So, I'm not comparing it to other currencies in this case. We can compare it to things like gold and what have you, where it has very little correlation to those kinds of assets. But I wanted to compare it to the equity market, because again, when we talk about what's happening in these markets, we're kind of thinking, well, where can you go to hide? What's a diversification? One of the things that I always kind of thought about, currencies, is they act more or less independently of markets. And for Bitcoin, to me, that would be one of the things that I would expect to start to see, is that Bitcoin would start to act independently of something like the S&P, but it's still pretty highly correlated, and that was puzzling to me. You're still right about it being much calmer over the past, over this period where we have, it's just really just fluctuating right around 20,000. It's not, 19 to 21 or something like that, which is, relatively small in terms of magnitude. But we're seeing a high correlation, and I'm wondering why that could be.
Well, I think it's obvious why. It's the same reason why I see all these weird projects at the conference, is because Bitcoin has been financialized to a very large degree. It's been brought into the arena of kind of speculative finance with a lot of derivatives and just plain day trading. And that's the other thing, is what I saw at conferences is too many apps that just do trading. I mean, how many apps do you need to trade crypto? It is, you don't need so many. And there's the floor is littered with booths. It's like, we trade crypto. Oh, really? And we raised, $10 million to do that. I'm like, that sounds, speculative. So it's not shocking to me, but I will say this. And again, I know that the data doesn't support it, but it would be interesting to see what it does on big down days for S&P. I'm guessing the correlation is still very high, but the idea is as follows. Right now, markets in general correlations are rising. We know that that's been going on for a while. Everything is becoming tightly coupled, and risk is increasing. Therefore,
And we talked about that a few episodes ago.
exactly, yeah. So the issue for the investor is what happens if there's basically liquidity stops, right? We see the debt markets breaking, or they're not broken, and they're maybe breaking is a strong word, but we see them, and it's not the word I use, right? Many top professionals in the debt markets used it over the last couple of weeks. There's something, really broken or breaking. When debt markets break, financial system will be under severe duress. And my guess is that Bitcoin will probably drop as well. But what I'm thinking is that eventually it will stabilize sooner, because when you're in that system, it used to be that you have equities and currencies, like you said, and there's diversification between them. Then there's usually treasuries and JGBs and European bonds, and then gilts in the UK. But over the last few months, it's obvious that that diversification benefit is not nearly as large as it should be. Because you see what's happening. We have equities under pressure. At the same time, UK gilts are under pressure. I mean, today we see Liz Truss fires her finance minister and basically changes public policy based on ultimatum from a central bank. By the way, as a detour, that sounds incredible to me. That in itself seems just insane, because at least mythically, Liz Truss is elected by people. So she's supposed to be in charge of politics. When you have a Bank of England unelected technocrat telling, and I'm not like I didn't vote for Liz Truss, I'm not a citizen, not even a fan, but when you have an unelected bureaucrat telling a supposedly elected leader that, look, you're gonna remove these tax cuts, or else we're going to stop the funding and there'll be like riots on the streets. Essentially, that's what I mean, because they said you have 3 days to liquidate and figure out this mess. And so she caved. So an elected leader fires her finance minister, changes a major policy on the pressure from the central bank. That in itself is crazy. But the gilts are not, you can't use gilts for diversification now. You can't use JGBs. You can't use European bonds, certainly. Treasuries, I mean, you can, but who knows, right? It's looking less solid than before.
As diversification, it's not working out.
Yeah. So it used to be the argument, the biggest argument for U.S. Treasuries for many, many years was that, I forgot who said it. I think it was Larry Summers said, it's the least dirty shirt in the dirty laundry, right? So it doesn't matter how bad it is, but everybody else is worse, and the money has to go somewhere. That argument will start working for Bitcoin. Unless it gets banned or severely crippled by the government action, which is certainly, I would not discount that, because if that happens, if the argument of the least dirty shirt starts working in the favor of Bitcoin, that is very dangerous for the Fed and the central banks, and they may, like we see in England, the central bank deciding public policy. That could happen in the US. So my thought, though, it will be much harder to do this with Bitcoin now. Over time, Bitcoin grew so many tentacles in the financial system that it would not be so easy to tear it out now. 5 years ago, the ban would be easy. It's done. Now, it would cause incredible ripple effects. So my thought is that, no, they will not ban it. They may severely try to limit it or somehow get people out of Bitcoin, but they will not ban it. And therefore, it will be the least dirty shirt. I know it's not supported by data yet, but that's by definition, because I'm talking about an event where financial system is breaking. But the question you should ask yourself, right? The argument by negation is that, well, where else is the money going to go? If, let's say, the treasury is not available, and treasuries also has its limits as to how much capital it can accept, especially with these rates right now, right? where else is the money going to go, Jan? Prove me wrong, in other words.
Well, I can't prove you wrong, but you haven't been proven right yet. And so, but I do think here. But,
wait. The volatility did temper. You can't say partially, at least. When we spoke a couple years ago, I told you that the volatility will come into its own, and it has. It's been
it's still,
many months. It's been very subdued.
Still around 60. It's still around 60 or so. I don't think that it's really tempered.
Well, look at the chart. I mean, if you look at the year-to-date volatility, it's not 60.
Right, but there's a scale too. There's a scale too on that chart that makes, like, the rest of Bitcoin is massive, and then this, just because it looks less massive now doesn't mean it's not truly massive.
Much less massive.
It is much less massive, but it's still massive relative to other things. This is what Bitcoin was created for, was for these kinds of, not just for crisis, but so we will see as this plays out if Bitcoin's role holds.
And
right?
it's, even tentatively, there's nothing else. Look at crypto. What else? Ethereum? Come on.
Oh, no. No. I agree with you that if crypto is going to work, it's going to be in Bitcoin. I don't think it's going to be in Ethereum or Dogecoin or whatever.
Yeah, Ethereum or Dogecoin. Ethereum is built as a world's computer, supposedly a blockchain that will basically be like a general ledger and a calculation engine for a lot of DeFi. But you know what? The transaction costs reach sometimes $50 when there's one successful app, the Crypto Kitties. So you can't handle kittens, but you're going to be the world's computer. It's not going to work, right?
Yeah.
Bitcoin is solid. It's rock solid code. It works for its purpose. It is, there is no digital gold, but conceptually, it is the thing that will accept inflows, other than, real assets. Real assets but real assets are tricky. They're not liquid. It's not so easy. They're geographically tied. They have large carry costs. Try storing gold. You need security and all this stuff, which is not to say that it's wrong, but to own gold, I think real assets make sense. But Bitcoin is an easier investment in that case.
Right. Well, I think, so like I said, I think that we're going into a good proving ground for Bitcoin. We'll see. If what's been happening over the last 3 months continues over the next, year or so, or however long this market volatility, could be 3 years, who knows? It could be over tomorrow. But however long this sort of, global uncertainty and crisis and inflationary environment lasts for, we'll see how Bitcoin acts in this. Let's see if it acts kind of like it was originally intended to act, because it wasn't intended to be this 60% volatility, daily volatility stock and or asset rather on a. But
the Fed made it so. Everything we're looking at in the world today is the direct result of actions of the Fed.
And the Fed can
continue to make
it
a $60,000 asset because it was a mania, but the mania was fed again by the fear of breakdowns and non-transparency and all those things.
But you're also correct that the Fed and other central governments can cause the kind of reverse mania. There's talk of them all developing their own digital currency, and
those things are not currencies at all. The central bank digital currencies are not this is not money. The money has some characteristics, right? It has to be fungible. It has to be it has to be divisible. It has to be limited supply, somehow limited, not unlimited. You can't print it, which we know that many of the fiat currencies don't really.
Really?
Yeah. Well, I'm not saying that there's actually, it's a very hard question of what is money. It seems very simple. It's like money. No, money is a very complicated question. And typically money, there are some characteristics, and what is considered money usually fulfills only some of them. It could fulfill these three or these three. Historically, I read of I think it was Milton Friedman's books where somebody described a tribe in Pacific somewhere, kind of a primitive tribe where they had their money was these large rocks. It was like these large, actually like stone wheels. And so you don't even have to carry it. You just write the name, like this wheel I pass to you, and it's just sitting there in town. And then and even one of these wheels fell into the ocean. And even on the bottom, it's still in the ledger. They're like, it's somewhere there, and we're passing it from one, and fine, it works, right? And in post-war Germany, cigarettes was money. So money can be many different things, but the central bank digital currency is not money, because money is something that is more or less unconditionally yours, unconditionally, meaning that if I have this money, I should be able to buy some food. It doesn't matter if you agree with me on some topics or not. It does not matter. I can buy something with it. Central bank digital currencies are these coupons. It's like a coupon conditional on good behavior. It's like in China, you write something to a friend in the messenger that's disloyal to the party, and you may not be able to buy food or at least a train ticket. That is not money. That you can call it social credit score, you can call it carbon credits, whatever, but it is not
I think
money.
if I can't buy food, and because that's my only source of my ability to buy food, then I'm not really caring what you call it, right? It's my method of survival, and so my method to buy food, to pay my rent, to whatever. And if the government decides that this is my money, whether you want to call it money or not, and say that it is money.
I disagree. Look,
but if I can't do anything, then
opens up a bread line and you're starving, you're gonna get some bread there. Bread line is not money; it's a way to feed you. So it's just, no, money is not just any method of survival. There are many. Money has some qualities, and in particular is that the money doesn't care who you are, right? I give you money, and it's just good in your hands as good in mine, and that is one of the qualities of money. And so central bank digital currencies are actually this thing that, for example, it can be programmed to expire. It can be programmed to not be spendable by you if you behave badly.
right.
It can be programmed to, for example, put limits. You can't buy more than gas than X, or you can't buy more meat than. It is not money. So it is never going to be a competitor to Bitcoin. Nobody is going to invest on those things. Only at the point of a gun. So
but yeah,
it is not a competitor to Bitcoin.
Well, my point is that it's not necessarily the competitor to Bitcoin in terms of like being a currency, but central banks would have the power to curtail the use of Bitcoin in,
and that's what I said, that they will want to.
But that's what I mean by a competitor. I mean, what I mean by a competitor is something that can adversely affect the value of something. Competitor can come in and take market share.
Right.
So it's not a competitor in that respect, but because central banks can dictate the way that you use things, they can say that you can't use this, and that would really, hinder.
Let's put it that way. Theoretically, if we live in a democracy, central bank has no say absolutely about whether we can use Bitcoin or anything else. It's supposed to be a subservient.
No, I get that. Yeah.
But in reality, we see in UK that they do. So we have to, reckon with that fact. But I do think that they will not be able to ban Bitcoin, because Bitcoin is too embedded into so many institutions, relationships. It's been too widespread. I think it is, whether you think it's good or bad, I tend to think it's good. It's metastasized, right? Usually it has bad connotation, but it's permeated financial and economic system. And to just pull it out would be impossible. Yes, curtail it, yes. But again, I think that all else equal, it's the least dirty shirt.
All right, maybe that's the name of this podcast, the least dirty shirt. As far as advisors go and their clients, I mean, I don't think we have any recommendations about whether or not they should use Bitcoin. This is more just a recommendation or discussion about what Bitcoin is, but they're going to see it more and more. I mean, we're going to be seeing this. To your point, we're pretty early days in this technology. I mean, it's essentially 12 years old now, but it's really, like you said, 5 years is an eternity in this asset. We're just getting started with these digital currencies and this blockchain, and so who knows where this is going to go in the future. But
my opinion is that if there's an asset that, at least theoretically, but strongly theoretically, right, logically, not just like pie in the sky, has ability to be a protective asset in the event of a systemic breakdown. And given what we're seeing now, if you're not looking at considering, at least studying it and being ready to buy some, and don't buy it when it goes up, obviously look for opportunity, then I don't think you're doing your homework. I think just to dismiss it on the grounds that, well, it's volatile and so on. Well, I mean, look, when you pointed about the internet yourself, internet was highly volatile. Was that sound logic to ignore it? No. I mean, look, railroads at some point were some of the biggest bubble investments in the world. Yet, I mean, we can't say that railroads didn't play any role in, in humanity or were bad investments. So I think that as a financial advisor, you need to educate yourself about Bitcoin, understand why I'm saying that it's predictable and transparent. Understand what it means to have open source code. Understand how Bitcoin emission works, because it's predictable. We know there's going to be 21 million Bitcoins and not a Bitcoin more. That's it. And right now, the issuance is getting lower and lower. Also understand why Bitcoin is a de facto reserve currency of the whole crypto world. Whatever happens in crypto, Bitcoin is the underlying reserve currency, you could say. So when people move between currencies and so on, Bitcoin is always the safest thing in that space. It underpins the whole space. So it's got a lot going for it. Not that I'm advocating that you're going to become rich or your clients become rich with it. They may. But when you're looking at risk, and our show is about risk, you have to look around and say, what could be the risk hedge? And I'm not seeing too many. Maybe next episode we'll talk about like metals, right? People talk about metals. I studied them a lot. It is interesting. But Bitcoin has some unique properties that metals do not as a diversifier. For example, first of all, Bitcoin is less financialized than silver or gold. Those are way over financialized, easily manipulated. And there's court cases constantly about gold being manipulated. But also Bitcoin, I mean, you can't send gold overseas in a minute. It just doesn't happen. It's much easier to store. So looking at these assets, you have to ask yourself, if not Bitcoin, if I'm dismissing Bitcoin, then what else? Where are the assets that are going to provide diversification? Treasuries, okay, but treasuries are not enough, especially in today's environment.
Well, one thing, we had this discussion yesterday a little bit. There's also an age gap here of who accepts, these kind of emerging assets like Bitcoin as that are suitable to their portfolio, and people that just think stocks and bonds are. And so older people are obviously going to be more on the side of what they've always known, which is stocks and bonds. But younger people, millennials and things like that, are really much more apt to uptake this digital currency. And I think this is an important point, as people try to get, as advisors try to get younger clients, because that's your whole next generation of people that you'd be giving advice to. These people are less likely to think that a 60-40 portfolio is appropriate for them. They're much more likely to look at things like real estate, real assets, cryptocurrencies, and things of that nature than they are just stocks and bonds. So I think that it's really an important thing to educate yourself on, just for the continuation of your business, just for the success of your business going forward.
But after the last few months, Jan, who thinks that a 60-40 portfolio is a great portfolio? Does that matter? Does the age allow you to take losses more easily? I think not. Actually,
no, it doesn't allow you. It doesn't allow you to think that the 60-40 portfolio is the be all end all or anything like that. But it doesn't necessarily mean that you think that that's not going to come back, because we've gone over 6 to 8 months or so, or 10 months of of this kind of high correlation between these assets. People have lived through these kinds of things before. They've lived through dips. So it doesn't mean that this whole system is dead from the mind of a retired investor that thinks their portfolio is going to come back and act the way that it used to.
I'm not saying it's dead, but also fundamentally, as a financial advisor or professional, you're watching the show, you have to understand that what we're encountering today is not some psychological risk. There's fundamentals there. The debt is growing. It is not slowing down. So you have to account for that. You can't say that, well, the debt will keep growing, but everything will go back to normal. When you're playing with scenarios, and we talk about stress tests, there's no stress test for today's show, but we do it for many others, and we'll do it in the next one. When you're doing a stress test, you have to have a plausible scenario with certain factor moves. For example, rates do this, equities do this, and macroeconomically as well. So plausibly, it's hard to see how the world would go back to 60-40 being a great portfolio in the near future. I'm not saying forever, but in the near future.
Yeah. No, I think that's fair. I mean, I think it would require some, because we can also argue that 60/40 hasn't been a proper portfolio for the last, 12 or 14 years, while there's been complete central bank intervention on this because, part of that is being manipulated, or much of it. So, but that's,
I guess it's okay.
We don't have to get into that right now. But anyways, and maybe we should leave it there for today's episode. But I think this is interesting. If you have questions, please do ask them in the in the chat.
Don't forget to subscribe.
Right.
Yeah, I'm being reminded to tell you to subscribe to the channel. We'll try to do a show weekly, and we'll see you next week.
Yeah. Thank you, everyone.